They finally flipped. That's right, buyers showed up finally with some serious force on the Tuesday session, completely invalidating the bearish divergences that we had flagged over the weekend, and it wasn't just in tech. With a mixed CPI report behind us and PPI tomorrow morning, markets are more so looking forward to the prospect of a, quote, guaranteed rate cut come September. This contributes to the real story, in my view, of what's going on here. It's not just mega cap tech anymore. Small caps and cyclicals are also catching a bid, and that could mean that this rally is starting to broaden out in a big way, specifically for the S&P 500. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 4 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So on the daily time scale, let's begin with some simple trend analysis. We're currently sitting at the highest high in the trend count, and today's gap up produced a brand new all-time high. So this, of course, is bullish. And we've come from an equal low in the trend count as well. Remember that on the breakdown from the labor report back here, we only made an equal low, we did not make a lower low. So therefore, is it reasonable that pulling back from the highest high in the trend count, the daily timescale can afford to find a higher low in the trend count? The answer to me is absolutely. And it should be fairly clear where the 2 major higher lows can be. The first critical one would be over the previous all-time high here at 639.89. It would be fairly textbook if we broke yesterday's low, offered a small intraday pullback, and then got some kind of reversal to trade back up to the equal high. That's a great spot for the first daily higher low. If the market goes beyond that, there's probably an actionable short, where in here we can look for a short from point A to point B, but I would not overstay my welcome at point B on the short side, because that's the next best spot for a potential higher low on the daily chart. You'll notice how into the end of this week at least, the daily 20 SMA, which is the orange moving average on the screen, will start to provide confluence. Obviously my drawing is not aligned with that, but you get the idea. A down day and something that looks like this would be a great spot for a higher low. Now, why is this the spot for the higher low? Because it offers support over the top end, or the bottom end, I should say, of what was going to potentially act as overhead supply. Remember that the concern headed into this week was that if we had taken out Friday's low, this would have been a lower high threat on the daily, and then something like this would have been the major question. Now that we're above the bottom end of this balance range from back here at 634.50, that's the next best spot for the ideal higher low. So the 2 focus areas on the daily chart are 639.89 and 634.50. If we get pullbacks to either of those spots, I would evaluate and determine whether or not buyers are trying to step up, and we can seek trend continuation in the upward direction. Now, the next question that might arise is, does the trend break to down if we fail this level here at 634.50? The answer is technically no, but it becomes a much more difficult chart to trade. This to this is still possibly a higher low in the daily trend count, but you can imagine if the pullback is this deep, there's a lot of threats here for a possible lower high, which would then possibly change the trend. We're not going to speculate on that yet, and into the end of the week, it's 639.89 and 634.50 for your big daily levels. Remember that this will be confluence with our daily 20 SMA as it slowly moves higher over time. In terms of the daily candle structure that printed today, I do want to call out that it was a perfect gap fill reversal. So we opened on the gap up where the overnight inventory was way too skewed in the net long position. It corrected, and buyers stepped up at the picture perfect spot for a bar-to-bar higher low. All of the price action today was outside of and above the Tuesday's range. That is bullish here, the gap fill reversal and the close here back up towards the opening print on today's Wednesday session. Now, in terms of upside targets, you can see that the upper portion of today's range is rejecting the upper edge of the weekly expected move. It doesn't mean that that has to continue acting as resistance into the end of the week, but I would respect it. If we go beyond that level, the measured move target of the major daily bull flag comes from this fib extension here, from the low up to the Thursday gap up high to the Friday pullback low of the labor report. You'll notice that this 100% extension is up at 656.20. That's not really a forecast that I would have in play for the end of the week, but it is the number of the measured move. If you want to have it on your charts, you could use it, but for now, it's a loose pie in the sky number. Let's continue along to the hourly chart and get a little bit more granular here with the price action. Once again, you can see how the market rallied out of the gates. It was actually quite a sharp rally in the S&P this morning, and then it promptly failed back underneath the opening print. Perfect gap fill reversal. Look at the multiple hammer candles, multiple lower wicks where buyers stepped up, repeatedly over the top end of the Tuesday range. That's what should have happened. So as of right now, the buyers are in control, especially after the trend higher day that we saw on Tuesday. If we look at the intraday action of Tuesday, notice that there was no hesitation whatsoever at the previous all-time high, and instead the market broke out strongly through that level. So when I say in the introduction that they flipped, buyers finally started showing up with a lot more confidence, and we'll see this in the market internals in just a second. You could see and maybe even remember that through here, it was like a short squeeze through the open and then sideways. Short squeeze through the open and then sideways, right? Same thing happened here into the Friday session. On Tuesday, it was a trend day all day long. The market continued to move in the upward direction, and I would argue we actually started to see the OTF, other time frame buyers, participating in the breakout into blue sky territories. So as of right now, bulls do have the upper hand. You could start to build the argument where, okay, if this is a short-term hourly double top, then underneath the neckline, you're probably watching today's Wednesday low for this pullback here to initiate that rotation towards 639. I'm getting these numbers all messed up today. 639.89, previous all-time high retest. Do we get the higher low? This is how I would participate back in the upward direction, looking for a hold here, and then a possible hold back over the neckline, or what could be the gap fill reversal level here at 642.85. If the market's going to be more bearish than that, as I said on the daily time scale, this is probably not an actionable short that I would be overly thrilled about taking. However, if the market were to produce something that looks like this is a hypothetical. The daily bar does not suggest this thus far. But if we were to get a lower high here underneath the previous all-time high, and then break this level here, the opening print of Tuesday, 360, again, 638.15, slow down here. This lower high is probably the more actionable short to get to that actual level at 634.50 we were talking about as the line in the sand, with the daily 20 as confluence there. Okay, so the short, if it's actually going to happen, is more appropriately underneath the prior all-time high. Some other areas or things that add confluence to this narrative. Let's come in here with the Fibonacci from the low. We'll pull it up to the high, and lo and behold, your Fib 38.2 is right in this sweet spot around 634.50. What else is around 634.50? Well, I'll save you the time. I know exactly what it is. It's the Anchored View App cluster. You've got the Anchored View App from the low as well as the prior all-time high. Those are the two white ones here. As they start to move higher over time, that's going to be right there to meet you at 634.50 with the 20 SMA as well as that fib that we were just looking at. So all things considered, should the daily chart pull back, we are looking for opportunities to buy that higher low, 634.50, and here 639.89. If the market does continue in the upward direction, because let's remember, we only talk so much about downside reference points when the market's trading all-time highs because those are the only reference points that we have. Obviously, the market is in a bullish trend here on the daily and the hourly. The market is well capable of consolidating and just continuing without pulling back first, and that's something that you need to acknowledge. How do you participate in that? It's generally a little bit more difficult, but a Brigade bolt higher low outside of today's range, which would conveniently be over the upper edge of the weekly expected move, should continue to seek blue sky territories and price discovery in the upward direction. The only time that this would become a short is if there is a prompt failure back inside of range, and then something that looks like this, that might actively set up the short. Here. Why? Because this is telling us if there's a spike that promptly fails. I'm talking about a 5-minute candle that looks over prior day's high, then the next subsequent 5 15-minute candles or so comes back into range. If we reject these prices, it's the market telling us that we're all set. We don't need to discover higher prices. The auction has found fair value, and we're trying to go back to fair value. Maybe there's a mild pullback. Remember, if this pullback does occur, are you overstaying your welcome? The answer has to be no. Why is the answer no? Good thing you asked, because we have more evidence here that suggests new money buyers are stepping up. If you're not familiar with the market internals, check out the video tutorial in the top right-hand corner. We talked endlessly about it in the weekend video. We've been talking about it quite a bit this week. Notice on the Monday session, we had a pretty flat volume flow there. Then on Tuesday, up, up, and away. Substantial volume flows into the close of the session, as was today. The reason I want to really drive this home is because today, the market technically faded, right? We were fading off in this direction most of the day on the ES, and yet the volume flows were still technically up. If you look at the advanced decline line on both Tuesday and today's Wednesday session, much more substantially closer to trend higher zone, not all the way in there, but closer to trend higher zone versus the chop and slop that we were dealing with throughout the up, down, up, down, up, down madness of really last week. So last Saturday's video had a lot to do with, all right, we're not bearish here, but we're a little bit skeptical of new money buyers stepping up. Well, those new money buyers are absolutely here based on volume flows, advanced decliner, and even take a look at these cumulative builds. It should jump right off the page at you when you're looking at the tick like this. It's a clear change in character from the market as we've made this advance in the upward direction. And it's not just here in the S&Ps, it's across all the indices that we watch. But let's be congruent. Let's finish this up on a strong note. Here is the market profile. If you're not familiar with market profile, it's just another way to view price action. Check out the video tutorial in the top right-hand corner. What we want to focus on is the fact that value has continuously moved higher, and we did not have a P-shaped profile on the Tuesday session. If this was just short squeeze like it was here, right? P-shaped profile. If we look at this, P-shaped profile. If we look back, whoa, okay, hang on a second now. Hang on now. Let's go back to where we were without this going crazy. This was the other up day from last week, P-shaped profile. That indicates short squeeze, emotional short squeeze, right? Emotional short squeeze through that thin structure. Look at the volume commitment there, not much. Same thing happening here. This was a pretty normal day on Monday, distribution. But look at the Tuesday session. Tuesday is a thin, drawn-out profile. It's not overly P-shaped in its actual anatomy, and instead, it's a thin, drawn-out, which is indicative of trend all day. Notice that there's even distribution of volume through most of the session. A little bit of a taper down towards the lows, absolutely, but generally, much more indicative of steady buying action through the session instead of a squeeze out of the open, short-term shorts, feeling the pain. This is new money buyers actively stepping up. You can see that value obviously closed higher on Tuesday, as did the point of control. And then here on today's session, value is actually mostly outside of the prior day's range. A little bit of overlap, but for the most part in the upward direction. The nuance that I would encourage you to carry forward, is the poor low on today's session. If you zoom in, there's just a lack of material excess. You can see there's one TPO of excess down there. It's not purely the GHI flat across the bottom, but what this would indicate is that the auction didn't really end properly at the lows, and therefore, if we need to clean that up, so to speak, put in the proper excess low, wouldn't be unreasonable that sweeping the low of the Wednesday session and coming back up into range, that would trigger a long, or if we break and stay below, we know that we're looking for that deeper pullback, and really, it's this level here on the market profile, which is kind of nice to illustrate through this perspective. Monday's high is the value area low of Tuesday. So as we talked about in the pre-market prep today, if you're not joining us for that, I would encourage you to do so. We're live every morning at 8 o'clock Eastern time on the channel here. But at the 33 level, 64.33, you have value area low of Tuesday and Monday's high. That would be a great spot for that pullback long. It's the exact same thing that we were just talking about over on the Spider's Cash ETF. So if this pullback occurs, just understand that you have another little point of confluence at that level. And it would also be repairing the poor low from here. We do have an excess high in A period, which is fine. That's great. That is indicating that the auction ended properly on the top side. So all things considered, the market is experiencing new money buying activity. There was a perfect gap fill reversal today, and at the exchange level, buyers are stepping up. This is bullish, and it's indicative of new money buyers, which we want to ride the coattails of. You do not really want to front run this and try to step in front of a moving freight train when the internals look like this. If the market was breaking out, let's play this out as a hypothetical. If the market was breaking out in terms of price action, like it did on Tuesday and like it did today via the gap up and gap fill reversal, but yet the market internals were flat here and flat here, I would say, yeah, of course, this is not something that we want to be longing up here. We want to actively seek shorts for mean reversion back to the downside. This is not being supported at the exchange level, right? Maybe the cumulative ticks were like this, advanced decline line came to the zero, bounced or whatever. Much weaker reads, we would not be trusting these highs. But now that this is the case, we're seeing the evidence at the exchange level, kind of have to go with it at this point in time. So pullback longs are the name of the game. Let's move into the QQQ Cash ETF. Let's just give a little reset to our daily charts here. Looks like Thinkorswim started to actually annotate the dividends on S&P and NASDAQ. I'm not a fan of that. Anyways, zooming into the QQQ, it was a gap fill reversal, not as clean on the QQQ. There's much more of an overshoot to the prior day's high, and we did close right on the prior day's high. Regardless, a lot of the same analysis happening here. This is the highest high in the trend count. If we do pull back for a higher low, anything over this previous pivot high back here makes a whole heck of a lot of sense. That's at 574.75. If we were to get that, equal high rotation becomes the target. If we do move deeper than that, your kind of line in the sand is here, closer to 566 on your QQQ daily. Daily 20 SMA is already there. Okay, so that's the downside. Of course, the threat will still exist that this will then start to look a little bit head and shoulders-esque. But for now, in an uptrend with new money buyers, if there is a pullback that gets there, my first thought is how can we navigate for a possible higher low on the daily time scale. Once again, 566, lower edge of the weekly expected move, daily 20 SMA. Let's drop it on down to the hourly chart. And I'm sure if I just do something like this, you guys already know where we're going with it. Intraday anchored VWAPs right at the level. If we come in with the fib, pulling it from the low up to the high, there you have it. Actually, this one's not as clean. I'll give you that. Roughly 61.8. So you could say line in the sand from a fib perspective, 61.8. You really don't want to be below that if you're trying to navigate continuation of the point A to B measurement. So we'll give you that. Let's go ahead and take a closer look at the intraday action from today. What I think is pretty compelling about this is there's a very obvious short squeeze level up and over 580.40. Not that I think a bunch of new money shorts were getting involved in the market, but this was clearly liquidation break. If we have short-term shorts who are late to the party on today's session, did not short the opening print, then over this 580.40 probably squeezes those sellers out, and we retarget today's high of day opening print at 582.80. So that would be a very quick trade off of the open tomorrow, an open in range. Quick Brigade bolt that looks like that gives you an upside move. If we take out the low of today's session on the QQQ, then I would inherently think, or sort of think more appropriately, what are we trying to say? I'd be much more convinced that there is a possibility for this pullback here through the thin structure. All right, you're looking at 576.35 and 574.75 as your key pullback zone. So let's say that you break and it fails, and then you're underneath today's low, something that looks like this. This is the spot you're looking for. This is your daily high or low. Inverted head and shoulders ultimately seeks the equal high. If we go beyond that with the lower high here, we could start to say, right, if this is how it unfolds, what is that, right? We can all agree on the hourly chart. Again, let's not speculate too much. If it happens, then fine. But for now, maybe a head and shoulders. It really has to set up and develop. First and primary base case is that this is actually bullish for the upside first. Again, 574.75. If it is going to reverse and get all the way down to that key daily spot here, the golden zone, it's ultimately the spot as a line in the sand based on the 20, the anchored VWAPs, the Fibonacci as well, 566. Has to be a lower high here. Below that level, and then a breakdown through what could be perceived as a neckline at 571.70. All right, that is what we've got out of the Qs. The only thing I'll say about this chart, which is a little bit more interesting, I believe, right? If we go back here, you'll see what I mean. See how on the Tuesday session during the opening range, you didn't really break higher first? If we go to the Qs, take a look here. See how the NASDAQ broke higher first over this previous high and then fell back underneath the level? If we had stronger sellers on the Tuesday session, hypothetically, this should have been a look above and fail. Sellers would have wanted to see price action here for the breakdown ultimately to the daily high or low I was just referencing. That obviously didn't happen, and instead the lower wick was left behind. So moving over the high of day on Tuesday really unlocks that upside, which is why this zone is going to act as your first major spot for a higher low. If you're going to defend this area and what could have been, then you need to sustain that as a higher low. Once again, 574.75, all set. Let's move into the NASDAQ side of the market internals, because what you'll see here is just a mirror image of the NYSE side, right? Strong volume inflows here and here, advanced decline line in trend higher zone both days, clear shift in sentiment out of the cumulative tick. Very clean stuff. Look at the Tuesday session on the cumulative tick here. We joked around about it in the morning live stream today. Again, 8 o'clock every morning here on the channel, free, open to the public. Come hang out. Look at that. That like belongs in a frame on the wall of the penthouse or something like that. That is just unbelievable tick action on that Tuesday session. So all things considered, buyers are in control at the exchange level, and we'll finish up the NASDAQ with a look at the market profile. There's a subtle nuance here that we want to pay attention to, which is not about the value area low and Monday's high, but rather on today's session, if you do this, this is very close to being a mechanical level as well. So you really have Tuesday's high and value area high, which is the same trade setup on the QQQ we just talked about as consolidation and then a pinch of those shorts up and over this Tuesday high. So roughly around something like your 23,955s in the NQ. If you can break up and over that, you're probably just targeting your high of day from today's session, Wednesday. A period single prints, I wouldn't really double distribute. I wouldn't call this a double distribution with a little B section in there. It's generally thin volume through that. So liquidation break off of the open. It's not really new money selling pressure. It's more so just longs who are off sides from the overnight move happening over here. All right, with that, let's continue along into our Russell side of the market because, of course, this is part of the main story here. Look at the Russell performance in terms of just the market minder window, up 1.3% on the session, continuing to absolutely rip in the upward direction out of this balance range here. So the premise of the trade, or the idea, and generally thinking about the way markets are interacting right now, is that the Russell produced a look below and a failure, accepting back in the range. So sellers failed. Sellers feel like this down here. Target's always the opposing end of the balance. So great, we hit the target. Little did I know, or little was I expecting, that on today's session, the Russell would continue to break out and move up and over the top end of the weekly expected move. Now, of course, it is just bullish. There's nothing really bearish to say about this chart. Is it possible that it needs some sort of pullback, some mean reversion here? I don't want to say it needs it. You never want to be overly prescriptive in the market like that, but it would not strike me as, oh my God, I can't believe the Russell pulled back, if we see the gap close, if we see a test of the top end of the balance range. So generally the name of the game here is to be bullish on the idea that cyclicals are catching a bid, small caps. We'll see this in the sector ratios as well. But like, this is a broadening out of the market rally, much more so than just the NASDAQ and tech leading the market higher. You know, your high flyers like NVIDIA, really the Mag 7, everything on the core list of companies. You're getting much more broad-based participation, probably on the premise of rates actually getting cut in the September timeframe, which is a segment we'll get to momentarily. So on the daily chart for smalls, as long as we're over 225.50, have to maintain the bullish stance here. Classic Brigade Bolt, have to be bullish as long as we're over that level. It, of course, means like the market can pull back. We can get there via some down days. That's fine, but I would not actively be seeking shorts on small caps if we are now spending more time over the top end of the balance, right? The moving average cluster is starting to clarify a little bit with the 200, 50, and now 20, instead of being a little bit more mixed like it was in here with the 50 underneath, right? So all things considered, bullish on this time scale. Let's drop it down to the hourly. You can see that it's, again, no resistance at the level, no resistance at the level. If we do pull back, it's probably a lower high underneath 230 that actively sets up the short if you're trying to scalp this into the gap close. Once again, I wouldn't really look at it that way. I would say if this pulls back, you're probably looking at an S&P pullback as well, and then we're reevaluating what are the odds for buyers to step up here via some kind of reversal pattern at 225.50. You guys know that I typically use the Russell as a bellwether gauge for the market, and that's exactly what I will be doing at the top end of the balance here. I'm not actively looking to short it or long it off of the level, just is it playing nicely for the S&P thesis, okay? Let's quickly jump in with our intraday anchored view apps. Are going to be a little bit sloppy here. You could say if the balance range high does break, this high from back on the Thursday gap up of last week would need to hold. That's a requisite as the next high or low. I wouldn't like that because then, of course, the opportunity is that just like this was look below and fail, is this going to be look above and fail? So if you're trying to, mitigate against the base case, you would just say a breakdown of 225.50 that then offers any lower highs in range probably does not help your bullish thesis, and the rotation should be to the bottom end. Okay? That is the IWM. Will come in just to be congruent with the fib pull from the low up to the high. And you'll notice the 38.2 roughly, not perfect, roughly aligned with the top end of the balance, 225.50. Let's check in on the Russell market internals because as we will see here, rinse and repeat, right? Huge up day, not a shock to see huge volume inflows both Tuesday and today's Wednesday session, close to trend higher zone, and a big shift in the cumulative tick as well in terms of tone relative to what we were dealing with as it was much more so sideways back here. So all things considered, the broadening out aspect of this market rally is what's most important. And just remember, like if you want a bottom line, probably means that the NASDAQ is a little bit easier to short. The S&P is going to experience rotation, which is going to be a little bit harder to short. It's going to be more resilient, and therefore I'd be pretty tactical about either number one, just avoiding shorts in the S&P, or number two, not overstaying your welcome as you approach key support, so long as this rotation continues to take place. The place where you don't really have to battle that, of course, is just, let's just say this is the NASDAQ over here. NQ, not that it has to go straight down, but you get my point. That's the takeaway about this Russell analysis that we're doing. You can clearly see that buyers got a little bit ahead of themselves. That's subjective, right? You could say the same thing here. Buyers got a little bit ahead of themselves, getting up towards that high of day, producing huge volume into the market on close. There's a spike on the Russell market profile. If we are opening underneath, I would say generally this level right about in here, 23.28. If we're under 23.28s, I would think the pullback starts. If we're above that level, bullish consolidation persists, and all these buyers are still made whole and they're feeling good. If we break underneath, that's again that's where I think, rather I should say, the S&P has the opportunity for a little bit more of a slip up, right? That's your market profile for the Russell. Let's get back over to the platform. Let's finish up today's analysis with some sectors, some additional indications, some trade ideas, the whole 9 yards. What do we have in terms of weekly performance? Weekly performance is still technically leans risk on. We have communications, the fourth heaviest weight sector by market cap, up 2.93%. That's risk on. We have materials. That's the cyclical side for sure, up 2.9%. Big breakout today. We have discretionary doing well, 2.46%. That's heavier weight and risk on. Third heaviest weight sector by market cap, excuse me. Healthcare, it's no longer heavyweight, and it is D for defensive, but it is outperforming slightly the S&P off the bottom end of its daily balance range. Semiconductors are up here, and financials are also outperforming the S&P. Underperforming, but still green, is utilities, staples, TLT, real estate. We could even go here, energy. All of these things slightly underperforming, but still green for the S&P 500. It's really not that bad of a flip. When we look at the XLK, it's only underperforming by, let's just call it 20 basis points there. It's actually not far off, but it's very close to being up still about 1%. The drop off here really starts at energy, where those underperformers come in. But what I think we should also check in on is, what does the performance look like through this rally here? And I guess primarily we'll just look at today's daily performance. And you can see that materials lead the way, so cyclical. You have healthcare, not really great. Energy, not really great. Discretionary staples, not really great, right? So on today's rally, ultimately, or gap and hold, you could even just say, it's not like you saw performance from the heavyweight risk-on style sectors that are pushing this thing higher. It doesn't mean that we should short this, but it just means, all right, chasing the highs, be a little bit cautious, mind your trade location, everything that we typically talk about. So with that, let's jump back over to our structural chart check-in, and this will be a really quick one, right? Any issues with this chart? Any red flags? No. Of course, it can hold a higher low here, or it could just give straight up continuation. Either option continues the bullish trend here on communications. If we look at materials, nice recapture of the neckline there. And again, thinking about the cyclical side, let's go XHB for home builders. Massive breakout today on the prospect that rates will be coming down in the September meeting. So generally, once again, the rotation theme is alive for your S&P 500. If you look at discretionary, nice breakout here, and you might think to yourself, okay, well, hang on a second. Why, Amazon and Tesla, they didn't really have the best days there. Amazon's technically green, but they didn't break out. What's going on here? Well, go take a look at HD, Home Depot. Home Depot is ironically in your XLY. You can go over here, type in XLY, and there you have it. It's the third heaviest weight component of the XLY, only about 7%, but still a nice update there. You get the point. Generally, the chart overall, if we go to the XLY, bullish on the failure of sellers to really accomplish anything back in this range, and now we, of course, have a brand new high here. So straightforward, higher low, Brigade bolt here, or just straight up continuation. Nothing here has a threat of a trend change. If we look at the XLV, bouncing off the bottom end of the trend channel and just going, so sideways, yes, absolutely, but bouncing off the bottom end of the trend channel is bullish for the S&P all up. Again, rotation. If we look at the semiconductors, a little bit of a, hammer. There was some pullback intraday today for sure, but was there anything detrimental to the trend count? No, we have a new higher high, and the lower wick doesn't even puncture this previous pivot from back over here. As long as the SMH tomorrow is over 297, I would maintain a bullish stance, seeking something that looks like this. That's primarily, going to be an opportunity for NVIDIA to break out of what is now a 5-day balance range. We will get to that in just a moment. Financials look fine here. Remember that the threat out of financials, the close watch was, okay, is this going to break the double top neckline? Survey says no, and currently trading back up to the equal high. That's bullish for the index. If we look at industrials, a little bit of a break over the daily 20. Looks good. No real concerns about this. If it was going to be a head and shoulders and oh my god, it's the end of the world, needed to break 148.25, did not happen. If we look at the XLK, excuse me, very similar to our QQQ, of course, a little bit of a gap fill reversal. Not ideal, but perfect would be just staying over 266.65. No problems with this as long as this is taking place. You can see that's why I have the alert here. If we're under that level, I would expect a little bit more of a pullback in the S&Ps. If we're just consolidating above, no issues. Just bulls on parade, still seeking higher prices. If we look at energy, inside the balance range here, not much to comment on in terms of energy. Real estate, prospect of lower rates, possibly giving this an uptick off the bottom end of the range at 41. Upward pressure. Bonds, a little bit of an island reversal here off of the key moving average cluster. I'd be curious to see what PPI does to this tomorrow morning. There's really been no implied volatility shift on the TLT. If anybody's been watching this, one of the trade ideas that I typically like to rinse and repeat is TLT put sales, and there's just nothing. Even on this gap down, implied volatility unchanged. So it is what it is, but moving along to the XLP. This is defensive, but again, think cyclical somewhat. Not the same as, obviously XHB, for example, but generally, if this is going to break out, this kind of movement here, 82.65 to 84.50, will be upward pressure for the S&P. It will keep the rotation afloat, but is it a heavyweight risk-on sector? The answer is no. So this is one of those situations where if you start to notice that the XLP is breaking out of its range, it's leading the S&P higher, probably look to your NASDAQ to start underperforming and possibly look for the short to actually take action on in the NASDAQ versus the S&P 500. So XLP is a top watch here, right? It's going to keep the S&P bullish, but it means if the rotation's taking place, money may be flowing out of tech to push this in the first place. Let's continue along and finish up the sectors with utilities. Really no big commentary here, just a higher low after a higher high. No big concerns. Upward pressure is upward pressure. If it does pull back, it's a lightweight sector. It's defensive also. Wouldn't be overly concerned if it is all the way down at the previous all-time high, 83.45. Let's check in on the structure. Now, we looked at the structure, the ratios. Moving too fast here tonight. What do we have out of the ratios? So if you're not familiar with how to set this up in Thinkorswim, I've got another video tutorial for you in the top right-hand corner. XLK continues to be the glue that holds the market and risk-on sentiment together, but things are improving. If you take a look at this, very short stay underneath this shelf of support, little overshoot, and now actually back over a downward sloping, hopefully we can flatten that out, but 50 SMA. So if the XLY is going to start performing well, I would actually put this back in the checkbox category, which is risk on. XLF is trying to find a low, but we're still undoubtedly in a downtrend. This is not helpful, and this actually looks decent here. Holds of the inverted head and shoulders and actually over the neckline on the break today out of the XLC. So we're 3 for 4 in the top heavyweight sectors in terms of risk on. Are we in an uptrend here? The answer is no. So that's not risk off, and this is pulling back. I would give this a neutral data point, still at a flat 50 SMA. So we still have a risk on sentiment and tone from the market. We'll see this as well in the specialized ratios, checking all of the bullish boxes here. Here, I would say we're holding the 50 SMA. It's clearly still upward sloping. This still looks great, just made a new high. This has a possible threat. Again, watch that XLP. If the XLP is going to offer a breakout through its range high, it's possible that this starts to, XLP outperforming the XLY will cause a downward tick here. So keep an eye on this. We'll go neutral here for that reason, but generally, this still looks good, breaking its flag, as does this pulling back from the highest high. So even on this dashboard, we still have 5 out of 6 indications for a risk-on market. Let's come into the B set. Gold ratio, not flight to safety there. TLT ratio, not a flight to safety there. Bitcoin, let's go full screen because on the daily, we are starting to get a secondary breakout attempt, right, over this high in here. Sailor Shift Tool is green on the daily, but we really care about this on the weekly. That's what it was designed for. Back to back, you get the red fire back to the green fire. Remember, this never took out the red weekly low, and it really maintained bullish chart structure anyways. You have lows, higher lows over the breakout point, right? So I maintain the bullish swing trade I have in Bitcoin right now, and still the target remains up there at 130s. We'll see if we can't get some kind of thrust up to that, and that does indicate bullish risk-on sentiment in my view. Bitcoin trades as a risk asset at this point. Let's look at the dollar. Obviously, PPI probably has something to do for this tomorrow. Dollar's rotating lower, interest rates slightly lower. I would only be concerned, or not even concerned, but there starts to become some conversation about interest rates when and if we break this range. Rates have really been range-bound for a while now. It's not really doing anything for our market at this point. Let's jump into the bond relationships. No, you know what? How could I forget? Got to talk about the Fed, right? A little bit of a move lower here solidifies the prospect of rate cuts. If we go on over to the Fed Watch tool, this is where there's a big headline this morning, I guess mid-afternoon after Goolsby and Bostic speaking this afternoon. Can't remember exactly. We'll see it on the calendar in a second. But notice here that the odds have shifted completely to a rate cut. Just this morning, we actually had about, this was 98 or so percent odds here. And then the other 2% was for some kind of pause at 425 to 450, right? And, I don't have to sit here and illustrate the whole thing, but now you can see that all of the odds favor some kind of cut in September. And that's really why the IWM is moving higher based on some commentary that was there from the Fed speakers and the prospect that, okay, inflation was pretty mixed. Speaking of inflation, we could just go look at this, right? Let's do that now. If we jump over here, not the best illustration there. What I have is this. You had a beat on the non-core and a miss on the core, which is kind of funny. This is the month over month, but what I want to illustrate is that the energy component of inflation is what dragged this slightly lower. If you were to take this energy and stack it back on top, month over month would have been hotter than the expectation, right? The other thing that I want to point out here is that shelter is acting as an anchor, right? If we go over to this here, this is core CPI month over month now. Shelter is pretty stable, but notice that services X shelter, so that's this component in cyan, not cyan, but rather magenta, that's really what contributed more of the growth, right? You could see here about equal on goods, and then your services inflation was almost about 1.5x, right? Maybe you could even, about 1.5x. Whereas if you were to take this and stack it, you might have been a little bit hotter on the shelter component, but I could actually show you over here because I'm calling BS on that graphic. If we go over to the CPI print and go down to the detailed report, shelter on the month over month was unchanged, 2 and 2. Okay, so I'm calling BS on the graphic, so maybe that means we should double check the others. Services less, we won't be able to parse it out, but there's your slight uptick, less energy. It's still including shelter, but if shelter's flat, right, obviously something else is contributing. You can see transportation is a bigger contributor, as is medical here. Okay, so I guess just parsing out that graphic, it is the services side of inflation, not shelter, that's causing things to move higher. And honestly, that would also indicate what? Well, it's not really goods. Goods inflation, which is seemingly what everybody's pointing to based on tariffs, seems pretty stable here, at least on the core. What about the non-core? Non-core goods or I guess that is core goods. Unchanged. So all things considered, inflation is not maybe as scary as it's been made out to be. However, I don't think that everything's in the clear based on what we simply know about the PMI, which was last week. If we go back over here, ISM Services PMI, we talked about this in the weekend video, did come in hotter than the expectations, especially on prices paid over time. That should drag prices higher. And that was likely going to be reflected in the PPI, which is coming out tomorrow morning. And you could see that this is already forecast for a 0.2 versus the prior, which was flat. This is when everybody was like, what inflation? There's no inflation out there. Well, we'll see if it shows up, right? PMI's, Purchaser Manager Index, definitely showed some degree of inflation in the last report. So I'd be watching this very closely. Bottom line for all of this is simply, if you're trying to trade the market on the long side and we get a hot inflation print, the market is not going to like that because it is going to unwind a lot of the bullish progress that was made today in some of those small caps and the cyclical side. All right, they rallied primarily on the prospect of rate cuts coming in as a, quote, guarantee. Continuing along, let's take a look at the earnings calendar into the remainder of this week. Cisco after the close today, really, it's all about Applied Materials this week. That's the only major name that I would watch from the earnings calendar. A lot of these sort of retail-obsessed names in here. Some of them did well, some of them did not so well. It's a mixed bag. Anyways, Applied Material probably has a bit more of an influence over the broad market itself because it's part of the AI value chain and what's going on with semiconductors. With that, let's continue back on over to the platform. Let's rip through the remainder of the indications and we'll see what's going on. Bond relationships. So as we talk about inflation, is it an issue? Is it not an issue? The bond market certainly does not seem to think so as of right now. No breakout in this ratio. If we look at credit spreads moving slightly lower today, that is an indication as we move to new all-time highs that risk appetite continues to remain elevated. It's a risk-on environment. HYG, this is another divergence that we had talked about in the weekend video, completely unwinding with the breakout to a new high here on the LQD as well. LQD is corporate grade, and anecdotally, the Roblox company, Roblox, is now graded as corporate, so in the basket. Continuing along and jumping into, where do we want to go? Total breadth. Breadth clearly expanded. This shouldn't be a shocker as the IWM was up massively. And as well, we have the RSP moving back up to an equal high. So all things considered, when I say that the market's broadening out the rally, it absolutely is via equal weight performing well. Now, when I also say that the NASDAQ is probably the better place for a short, I think it becomes very, very clear when you look at the equal weight NASDAQ how this is not even close to the equal high, whereas the RSP, S&P 500 side, already is there. right? So that's evidence in my view that supports the NASDAQ's the short, the S&P's the long, based on rotations. With that, let's continue along to the volatility side of the investigation, lower on the VIX. If we take a look at the VVIX, I probably could have just jumped to the other chart for the same time. Anyways, VVIX slightly higher. This to me is more of an indication about hedges for PPI tomorrow morning, and I think that this is confirmed if we take a look at something like the vol futures, still moving into a very aggressive contango. This is what money managers like to see. Same thing here, 9 versus 30-day VIX, and a very slight uptick out of the one-day VIX. Once again, as the market sort of faded and then found a bid into the afternoon, right? Remember, the S&P 500 went like this and then like this to close out the session, little upper wick, something like that, if that's the opening print, right? That's the S&P 500, but yet VIX one day closes at its high. Hypothetically, as we're rallying here, volatility pressure should be there. So again, PPI hedges seemingly are what's going on with that look. Not overly concerned about a structural change in volatility given what's happening here with our vol futures. And if you're not familiar with that, you can always just come into here, VIX, and you could just take a look at your vol curve. Massive contango, even throughout the back end of the curve as well. If this inverts, we'll have issues, but we're not even close to having that conversation yet. Let's move on into the core list of companies. Let's see what's going on with these charts. Where are the trade ideas? NVIDIA, it's got to be a top watch. It remains in a 5-day balance range. We just talked about the SMH. If this can break up and over these highs more confidently and give that Brigade bolt on a 2 or a 5-minute chart, we have to be ready to capitalize on that. That's over 183.75. Looking for the overnight all-time high at 185.45, and then continuation of blue sky territories. You could probably take a measured move off of a range double, just based on a quick eyeball test. That might be roughly 188, we'll call it for round numbers sake. Let's continue. I guess we could go to the hourly chart. There's really not much more to glean from here other than just the balances in play. You could parse out the midpoint if you'd like. It'd be best if consolidation continued up here, building out some semblance of a higher low and then breaking, and then breaking like this. Right, so we shall see over time, but the 5-day balance is absolutely interesting. Charts will not remain in balance forever. At some point, there will be excess, whether it's up, whether it's down, to be determined, but I want to be prepared for this possible break if it's going to happen. Microsoft is up next. Daily timescale is going to help us out here. This is still the gap fill reversal level from the earnings gap up, previous all-time high, daily 20 SMA as well. The only idea that I could see here is maybe, because this was a straight shot lower, if there is going to be a counter trend move, if we overextend and Brigade bolt here, it's a possible long for that counter trend move. I would not overstay my welcome. There's clearly been relative weakness post the earnings gap up. It could not sustain any of this buying pressure from here that tried to leg up back towards the opening print. If we take a look at Apple, nice break on the daily chart. We talked about this into the end of last week. Sorry for the auto zoom there, but this breakout here, very nice. Over the daily 200, sure. Daily 3-bar play has played out. Shout out to Sky in the live squawk, who I believe was long this. And generally, right, this is just like, there it is. Like that was all there really was to Apple today. Does it hold this level? There was a nice little on the 5-minute, even the 2-minute chart looks quite nice too. 2-minute inverted head and shoulders to kick off the day right here, break the neckline. That kind of, led to the move there. So generally, I would maintain the stance that bullish is probably the right call on Apple. It's just a matter of, is the move over? Right, this is the next key resistance coming from the daily, which offered this large breakdown over here. You're home at the target, 235. So it doesn't have to be over, but you probably need a new catalyst if it's going to do something that looks like this again. There's a minor catalyst on Apple today about robotic arms being implemented in factories, I do believe, but that move was completely faded back down to flat. So the idea here is either consolidation back to the daily 200 and then go for a more firm, concrete daily higher low, or holds of high and tight consolidation that then Brigade bolt here, seek upside continuation, but ultimately you have to just mind that trade location. That's the only thing about that. Now, that becomes a little bit iffy. Let's jump into Amazon. Nancy, you can see I've already got the alert set. Daily bull flag happening here. Breakout today over the hammer high. This is going to continue possibly closing the gap and also recovering over the daily 20 SMA, the orange moving average on the screen. That's 224.75. On the hourly chart, you can see it here. Right? This was a little descending triangle. This breakdown was very short-lived, and buyers did step up. Now, very difficult to capture intraday. If you go to a 5-minute chart, this thing was wacky, right? Look at this, just kind of building out this ascending triangle. If it's going to break up and over that 224.75, that's where we want to be involved on the long side. If we take a look back on the daily, or just this is back to the hourly, there is your gap close overhead. So please, with respect to this previous low that was also a high back here, that's at 226.50, very faint on your screen, I'm sure. And then this level as well, that's 229.50. But generally, this is the prospect over time. Risk and reward through this range is the idea. Right? Amazon, bull flag breakout. It's a decent, not better than decent. It's a really good looking chart. Let's look at Google. Google's a little unfortunate. There was this afternoon news about not wanting to include, crypto wallets in the Google Play Store or something of the sorts. I'm not a Google or Android kind of guy, but it is what it is. It clearly went straight to the key level. The unfortunate part about this is that it was just so fast. Right? If you look at a 5-minute chart, it was a liquidation break that was immediately bought back up. Unless you were there at 198 waiting for it, there's no trade here, basically. So all things considered, the chart did what it was supposed to do, hypothetically, right? If we go to the hourly chart, the Brigade bolt is here. Now it's just a matter of how do we get involved. So if we open anywhere up here, I would tend to think, okay, this is the high or low. Maybe it's through here to get to the all-time high. That's over 204.10 to get to 207 flat. That's maybe the idea, but given this kind of funky lower wick, it might leave a little bit to be desired. The best thing would have been like if this pullback happened much more like capturable in a capturable sense. If Google had like a nice, first 2 5-minute candles of the day were straight down, then we get a hammer down here or something like that to then move back higher. Just wasn't the case. So unfortunately, got to move on from it. The 198 level at least. Maybe it's in play for this. We'll take that one step at a time. Metaverse kind of failing the all-time high breakout on the Tuesday session. Look at the lower high happening here into the afternoon. You can see I've got this alert set because it's a multi-day high breakout point. This was the Tuesday origination of the rally. So 772.75. If we get there, I might consider a long, but you can hear the hesitation in my voice because it's really just the midpoint of a multi-day range. And what do we know about the midpoints of range? Don't enter in the center, don't exchange in the range, and certainly don't fiddle in the middle. So I don't know, 772.75 is definitely a level. There's maybe something to do there, but it's definitely not a top priority. Moving along to Tesla, this one is a top priority. I'm going to get this one day. It's just been, it's been a little bit of it slips right through the fingers. Just when you think you have it, slips right through the fingers. I like this action that's trying to develop over 346.50. We've got a multi-day range. I don't like the fact that it's a failure today, but the fact that we did not close an hourly bar above spend consolidation and then fail leaves me somewhat open-minded to trying it again over 346.50. If we can get that, there's about 10 points to the upside. I mean, you catch Tesla on one of those days where it has a day, that's easily going to wipe away the stop out from this morning on Tesla when we attempted the trade in the first place. So watching that 346.50 very closely tomorrow, I don't like the prospect for Tesla shorts underneath this range. You could probably call it a double top in hindsight, but because Tesla is just now starting to get going on the daily chart, if we do something that looks like this, I don't want to be shorting this breakout until it either fails underneath this point, way down here, and then we have a huge component of trapped overhead supply. So kind of taking it one step at a time, treating this as a 3-day range. It's not the best looking daily chart with this daily bar from today's session. I'll give it that, but that's it, 346.50. We'll watch to see if we can get it on that move to 356, this previous pivot high. As long as we're over, I would say base case, bottom line, as long as we're over 334.50, I would maintain the stance that this is just trying to build out a bull flag on the daily, trying to do that over time. If we fail it, different story, back tangled up in the VWAP, or not VWAPs, but moving average cluster, a little bit uglier inside of this range here. Let's move along to JP Morgan just to check in on financials. Looks okay in this balance range. Ideally clears 296 to continue the advance here and prevent sort of this head and shoulders look. Let's move along to Palantir. Palantir is a possible short if the broad market, so asterisk, if the broad market is falling off of a cliff, then perhaps this idea here becomes interesting, right? Notice the failure there. So instead of trying to short Tesla, I would more be interested in saying, okay, Palantir failed the all-time high, no new price discovery, lower high intraday on the session. If we crack this low, we have multiple days of overhead supply. If we're under 183.50, probably targeting this low and then this low. All right, so risk and then reward like this, and then possibly ballooning runners to that level there. Okay, that's Palantir. I'd be a little bit less interested in just consolidating here. If it does go, has to be clean, has to show me something nice. Today was not that kind of day. Let's move along to Broadcom. Broadcom, another one that was, typically Broadcom has a really great history of just perfect gap fill reversal every time, prior day's high. Not today. Nothing off prior day's high, nothing even over this level or even this level. 310 and then 308. So being a little bit more open-minded to either direction in this range for Broadcom. If it is going to build out a head and shoulders, that's fine. Be patient. Have to see the move under 302.85 before we can say confidently that the trend has changed, right? This is the lower low, right? As of right now, you would just have a high, maybe a lower high, speculation as of right now. Lows equal lows. You need the lower low break before you can actively short that. It's my take at least. AMD, let's go to a daily. AMD breaking this bull flag, straight, just really nice continuation, honestly, intraday. Gap and go. It's been a relative strength monster recently. Hammer off the 20 prior day. So all things considered, the chart looks really great on the break of the daily bull flag. Intraday, I think we have a couple of little nuances to pay attention to. In this range here, I'd be kind of neutral over prior day's high, over 186.75. Seeking continuation. There's a lot of range there to 193.25. That comes from the daily chart. We're actually going to have to grab more than a year's worth of price action because it was the advanced money destroyer after all. That is this high and then this previous low before the breakdown, right? So low equal low, breakdown, lower high here. Those are the two levels. 193.25, 196.25 are your upside levels. So consolidation, Brigade bolt over time. If this is going to go out of a daily bull flag, easy. I shouldn't say easy, but seems reasonable that it might get there on the daily measured move. If AMD pulls back under 183, I'd be much more open-minded to looking for this level here, the top of the gap, and seeing whether or not this level is going to be supportive at 177.85. Right? Ideally, the better trade this morning, instead of just this move over 183, would have been some kind of washout to close this little area here and then along off of 177.85. Didn't really get that this morning, so it'll continue to remain on watch. It's been a really hot name recently. The other observation here is just that there's a lot of opportunity on AMD. It's been going round trip many, many times in any given day. Right? Look at this, back to here. This is round trip to the high, low, back to the high. Right? A lot of round trips here in this name. This, here, right? This, low, high, midpoint, all over the place on AMD. So just keep in mind that there's a lot of opportunity. If you miss the first setup, it's probably worth continuing to watch AMD and not just saying, all right, first setup's gone, missed opportunity, on to the next one. Keep watching this one. It had a lot of intraday opportunity. That's something, I'm saying that because I need to do that myself, right? Anyways, Robinhood, final on the list, and then I've got 4 ideas for you. You can clearly see the bearish consolidation here, but I think that this is a great spot on the daily chart for a potential higher low. Previous range highs after this to this, great higher low, daily 20 SMA. It could do 2 things. I would look for the Stevie Wonder trade over 109.40 to target 113.50, origin of where we really accelerated from. Or we close the gap first, excuse me, what did I just draw? Right, left, head, right, break of the neckline, same concept, but just after the gap close, right? So either way, looking for Robinhood to set some kind of daily higher low attempt here around this 107.50. If it blows straight through it, first red candle like this tomorrow, not interested. If we're down here at $100.75, it would have to be respectful and offer this if it's going to go. Okay, that's Robinhood. That's the final idea from the core list of companies. 4 additional ones for you. Reddit. Reddit is up first. Break to brand new all-time highs today over the inverted hammer high. Of course, there's the pullback risk in here, but if we pull back to 228.80 and hold previous all-time high, it's a great spot. Look at this. Is it possible that your hourly trend channel that's really bad. Let's use a straight edge. Is it possible that your hourly trend channel just continues? Absolutely. You get to here, look for a possible long, back up to the equal high, then target the top end of the trend channel. Right? That would be blue sky territory. So Reddit, keep it simple, 228.80 as a possible watch. Next up is Datadog. Datadog is a possible daily hammer. You have an inside hammer today, both of them off of the daily 200 SMA over these hammer highs. I think you have a day trade scalp to 132.10 over 130. Then you have thin structure retracement. I'm not going to sit here and say it goes immediately to the earnings opening print there at 147.75, but on the hourly chart, you could start to see it's really some pretty thin structure over that 132.10 spot as well. So this is the idea for a day trade and then possibly looking to balloon runners if you're into that type of thing for that move over time. You're at the daily 200. That's the key component here with back-to-back hammers. Failure to go lower underneath the Monday low. Right, both of these lower wicks puncture Monday's low. Sellers cannot get the job done on the low. And of course, if we're going to squeeze them out, it starts over the 2 equal highs, 130. That's Datadog. Next up, a couple of swing-ish ideas. Caterpillar is up first. Caterpillar's pulling back on the daily chart straight into this previous shelf of resistance. If you look at the daily, you have a hammer here, inside hammer. So something over today's high to target this becomes interesting. Just generally holds of 410. If we can hold 410, move to here, that's the overhead supply lows at 427, any clearance of that, I think you're trading back to new highs. Okay, that's Caterpillar. Next up would be Netflix as the final idea. And again, these two, Caterpillar and Netflix, probably more along the lines of a swing. Bearish engulfing bar on today's session, which definitely would indicate the possibility of further downside, rejecting the daily 50. If we do get that downside to step in, I'd be very curious to see whether or not 1185, top end of this range from back here, is going to act as support for a possible higher low, right? From here to here, and then what do? We target the equal high and this level from back there. So the idea would be, can we develop risk reward along those lines? 1185 targets 1239. Okay, that's all I've got for you in today's episode of the Midweek Market Update. We do this style analysis in depth, just like this, every single day with the Live Squawk crew. After the market close, of course, we recap any trades that we took in the morning session. If you want to come hang out and be a part of it, you can join via the link listed down below in the description. All the other links for other resources are down there as well. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. In the morning show today, we talked about some possible merch for the fall timeframe. A lot of votes for t-shirts. If you want t-shirts, let me know in the comments section. We could do basically anything, right? T-shirts, sweatshirts, baseball hats, embroidered vests if you really want to put your Wall Street uniform on, right? Midtown uniform. We could do leather card holders like we did, what was that, a couple years ago, right? We could do water bottles, mugs. We could do anything. If you have any interesting merch ideas, I'd love to entertain it down below in the chat. We can get some stuff prepared for the fall. That way you can have some, festive holiday stuff from the Trade Brigade, okay? That's all I've got for you in today's episode of the Midweek Market Update. I hope you enjoyed it. I will see you guys, well, first of all, have a green trading week, and as always, I will see you guys in the next one.